Hello, welcome to another section of RAD accounting. Today we have a question on bank reconciliation statement. Again, bank reconciliation statement is a statement prepared by an account holder, a current account holder between the cash book balance and the bank statement balance. That is the definition of bank reconciliation statement. So today we have a question on bank reconciliation statement. And I read that the accountant of Ivana Limited is attempting to reconcile the balance shown in the cash book with that appearing in the bank statement. The bank statement shows an overdrawn amount of 6 million and 30,000, while the cash book discloses a credit balance of 1,500,000. The following are discovered upon investigation. A check paid to ABC Limited for 1,530,000 has been entered in the cash book as 1,350,000. Two, a transfer of 3,750 to Akuti Rural Bank has not been entered in the cash book. I. Check drawn amounting to 1,800,000 has not been presented to the bank. 4. Cost of transactions of 900,000 has not been entered in the cash book. 5. Uncredited checks amounted to 2,400,000. 6. The Senate checks of 2,250,000 have not been written in the cash book. 7. A standing order payment of 1,350,000 has not been entered in the cash book. That's 8. The bank received 4,500,000 from a customer on behalf of Ivana Limited. On behalf of Ivana Limited. You are required to A. Prepare an updated cash book. B. Prepare a reconciliation statement as at 31st December 2023. So this is the question we have, and we are going to solve it. We are going to prepare our updated cash book and our bank reconciliation statement. So let's prepare our updated cash book. So first of all, let's write the name of the company, Ivana Limited. Okay, we are preparing our updated. It can also be adjusted cash book. So updated cash book. So since we have three zeros at the end of each of the figures, I want us to keep three zeros up. So let's bring our sign nicely. We bring our three zeros. Then we bring our three zeros nicely. So now we move to the question. Now the question says that the cash book, so this is the cash book. The cash book has already been prepared and it had a credit balance of what 1,500,000. And now we are going to prepare an updated one. So we are going to start with the balance of the cash book, which has been given to us in the question. And the question says the cash book discloses a credit balance, which means the opening balance for this updated cash should be on the credit side. If the question says credit balance, then it means it should be on the credit side. But if the question is silent, whether it's the balance on the credit side or debit side, please you have to put it on the debit side because the cash book is an asset and all assets have a debit balance. So when you have a question and the question says that the cash book shows a balance of, then you put the figure there without saying credit or debit balance. You have to put it on the debit side because the cash book, which is the bank column, is an asset and all assets have a debit balance. But then if the question specifies, then you have to do what the question is asking. So with the question we have here, which says that, so this question says that while the cash book discloses a credit balance of 1,500,000. So we've kept three zeros up there. It means our close opening balance would be on the credit side, which is 1,500. So now let's move to the discoveries. The I said a check paid to ABC Limited for 1,530,000 has been entered in the cash book as 1,350,000. So a check was paid. So as soon as a check is paid, we are given. So we have to credit our cash book. That is the bank column. So we were supposed to credit it with 1,530. I'm not going to talk about the 330 because I've kept the three zeros here. So we're supposed to credit it with this, but then we mistakenly recorded 1,350, which means the credit side has been understated. The credit side has been understated. So what we have to do is we have to find the difference and add back to the credit side because it is the credit side that has been understated. We're supposed to record this and we recorded this, so it has been understated. So we find the difference, and the difference is going to give us 180. So it's like we are going to add the 180 back to this, which is this one is already on the credit side. So we are going to add the 180 back to this one to give us the 1,530. I hope it's clear. So we find the difference. So this one is error, which is under statement, which is 180. So you only write the difference. You only write the difference. So it depends on the error and how you're going to treat it. I'm not saying every error is treated like this. It depends on the error that is given, and you know how to treat the error. There can be overstatement, which you have to debit or credit. So you just have to read the statement and know which type of error it is and you correct it. So let's move to the next one. The next one said a transfer of 3,750,000 to Apoti Rural Bank has not been entered in the cash book. So this one is a transfer to Apoti. So it means we are giving to Apoti Rural Bank, which means we were supposed to credit our account, but then it was not recorded. So now we have to record it. And if you are transferring, you are giving, and if you are giving, you have to credit to your account. So we say omission, omission, error of omission. If you want to, you can write aputi, aputi, which is 3750. Let's move to the next. It said checks drawn amounting to 1,800,000 has not been presented to the bank. So clearly we can notice that this is unpresented check. Let's move. So we don't treat unpresented check in the updated cash book. We treat unpresented check when we get to the bank reconciliation statement. So always treat your unpresented check in a bank reconciliation statement. And the next one is cost of transactions of 900 has not been entered in the cash book. Has not been entered in the cash book. Cost of transaction. So there is a cost here. It means we paid. Cost means we paid, and it has not been entered in the cash book. So if we paid, then it means we gave out. And if you are giving out, double entry principle says that credit to your account. So what we and it was not recorded. So here to we say omission, omission, omission. Then can put into brackets what that is cost of transaction. Then you write the amount, which is 900. Then the next one is uncredited checks amounted to 2,400,000. So we don't treat uncredited checks in the cash book. We treat uncredited checks when we get to the bank reconciliation statement. So we will put that there for now. Then we move to the standard check. The standard checks of 2,250,000 have not been written in the cash book. So as we already know, the standard check will be on the credit side of the updated cash book. Why? Because when we receive the check in the first place, we debited our cash book. And now presenting the check to the bank for payment, the check was rejected. That we should return the check to the drawer, meaning we should return the check to the person who gave us this check. They are not accepting the check. The bank is not accepting this check. So, and we've already recorded this amount, this check in our book by debiting our cash book. So, since it was rejected, we have to come back and cancel it in our book. And since it is on the debit side, we cancel it by what? Crediting our cash book. So we come and say this and check. This and check, which is 2250. Then there is a standing order. So you see standing order is a written instruction given to a bank to make payments on behalf of the account holder. So I've made a video where I've explained all the terms in the bank reconciliation where we have the dishonored check, uncredited check, unpresented check. I've made a video on it so you can watch that video and get the explanation of all these terms in a bank reconciliation statement. So the standing order, you are making payments, and if you are making payments, you have to credit your account. So we have standing order, which is 1350. Then you said the bank received 4,500,000 from a customer on behalf of Ivana Limited. So here we are receiving, and if you are receiving, you debit your cash book. So this is a credit transfer because the customer transferred it directly into our bank. So we say it is a credit transfer. So we can come here and see a credit transfer, which is so now let's balance this. When we balance this, we have 9930. Then we have also here 9930. And when we find the difference will be our balance carried down, which will be 5430. And if we bring down here, our balance brought down, which is 5430. So it shows that our updated cash book is still showing a credit balance, which is an overdraft. It is an overdraft. I've explained overdraft in my previous video, and we're watching get the meaning of overdraft. So anytime the cash book, that is the bank column, shows a credit balance, it is an overdraft. So now let's prepare our bank reconciliation statement. So bank reconciliation statement, assets 31st December 2023. So you bring out CD sign nicely. You bring out so this is an overdraft. You're going to start with our balance for the updated cash book. So it is an overdraft. So overdraft as the updated cash book. So the overdraft as per updated cash book is 5430. So in my previous video, I explained the format when it comes to the bank reconciliation statement, that when the balance is not an overdraft, when the balance of the updated cash book is not an overdraft, then we add unpresented checks and wrong credit. Then we less uncredited checks and wrong debit. But then if the updated cash book is an overdraft, we no longer use that format. The format will change. Now, since it is an overdraft, we are now going to add uncredited check and less unpresented check. So since this is an overdraft, that is the format we are going to use. So here we add uncredited check. So uncredited check in the question is V. Uncredited checks amounting to 2,400,000. So I'm going to write 2,400 here because I've kept 3 zeros up there. So we are saying we should add. So when I add this, I will get 7830. Then we less unpresented check. So looking at the question, unpresented check is I, which is 1,800. So when I less this, I'll get 6030, which is an overdraft as per bank statement. So you can see that the balance that you are getting here should be the same as the balance given to you in the question. So if you are not getting the same thing, then probably there might be a mistake somewhere which you need to check and rectify. So that is all for this particular question. That is the updated cash book in a bank reconciliation statement. Very, very simple. So there are more tutorials coming on this channel. So today is your first time on this channel. Subscribe to the channel, like and put in a comment section, put in a comment in the comment section, and also share to your friends for your friends to also have a benefit of this channel. Click on the notification bell so anytime a new video is uploaded, you'll be the first to be notified. Subscribe to Rad Accounting Tutorials. Bye bye. See you in my next video.